collateral damage on Dalal Street. The market tanked in line with the global meltdown triggered by China. The Sensex nosedived a whopping 1624 points, even as the Nifty broke almost all support levels to shut below 7,800. Both indices are down over 6%. That's the biggest single-day fall that we've seen in the last 6 years. By the end of the day's trade, investors lost a whopping 7 lakh crore rupees as panic gripped D Street. The rupee wasn't spared as well, despite some brave talk by RBI Governor Raghuram Rajan.
The government, in fact, tried its best to talk up the sentiment. Finance Minister Arun Jaitley reiterated that India's macroeconomic fundamentals are very much intact, while Minister of State for Finance Jayant Sinha said that investors need to take a long-term view. But with every market and every asset class falling like 9 pins, there were hardly any takers for that pep talk. Experts, meanwhile, say that more pain may be in store with Europe and US markets taking further hits. No one is really betting on a quick recovery on Dalal Street. The big crash in global markets and what it means to India is our top story in this very special edition of Business Tonight.
It's collateral damage on Dalal Street and investors are running for cover. The nightmare began at 9:15 in the morning with the Sensex and the Nifty opening with deep cuts thanks to a global meltdown led by China. It was a sea of red on Dalal Street within minutes of trading. Things only got worse as the day progressed, and even an assurance from the finance minister did precious nothing to soothe the frayed nerves.
Now, the factors responsible for this are entirely external. There is not a single domestic factor in India which has either contributed to it or has added to it.
And it was not just about stocks. Barring gold, every asset class was beaten out of shape. Crude fell below the $40 mark, even as the yellow metal made some smart gains. The Indian rupee, which is at the receiving end for some time now, suffered its worst fall in almost 2 years. Once again, RBI governor's bid to talk up the currency failed quite miserably.
We have approximately $380 billion in reserves to be used as and when the need arises. We will have no hesitation in using our reserves when appropriate to reduce volatility in the rupee.
Things went out of control in the second half as losses mounted in the last hour of trade. It was now the turn of Minister of State for Finance, Jayant Sinha, to do his bit.
Volatility is part and parcel of operating in these capital markets. So we just have to work for these factors, whether it is the Chinese economy slowing down, whether it's the possibility of the Fed raising rates, whether it's what we're seeing in terms of commodity prices.
And by the end of trade, investors were poorer by 7 lakh crore rupees. The numbers are indeed scary. With a whopping 1,624 point loss, it's the worst hit for the Sensex since January 2009. And the Nifty, which has lost over 6% in just a day, has not had it so bad in many years. Not even the brave hearts are betting on an immediate respite, and maybe rightly so. The cues from Europe are hardly encouraging, and if the opening trades on the Nasdaq and the NYSE are anything to go by, tomorrow is unlikely to be any better. With Vijay Ganeshan Iyer, Ashwin Mohan, ET Now, Mumbai.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.